Thanks so much for joining on Tuesday, the 15th of July, Bastille Day. And look, let's head straight into the charts because there's so much going on in financial markets at the moment. We have a huge amount of economic data to process, but also some key market moves as well. Obviously, as usual, I'm starting with the World Equity Index. So this shows most of the global equity indices. As you can see, US markets are open at the top here. If you follow my pointer, we've then got European markets below it. US markets, they've opened up higher, so slightly higher, 0.2% rise for the S&P 500, 0.6% rise for the Nasdaq. That's all down to one stock in particular, which we'll talk about in a moment, and I'm sure you can guess what I'm going to say, Nvidia. But as you can see, sentiment's drained a bit from Europe. Now, nothing major. We have seen quite a big decline in the Ibex, but that's for specific regions, specific reasons. But 0.1% decline in the Eurostoxx index. As you can see, we're into the DAX index here. That's been led lower by financials, communication services, and industrials as well. So we've got a bit of a mixed picture there for stocks right now. But let's go straight to Nvidia. I wanted to show you Nvidia. Now, this is a price chart for Nvidia. It has made another record high. Now, the reason why is because the US has changed its export rules about its H20 chip. So that is a key chip that one of the biggest sellers actually for Nvidia, and it wasn't allowed to export those chips to China because of tariffs and trade regulations. Now, the US has eased regulations on that. They're going to allow them to send much more higher tech AI chips or chips used for AI to China. Now, what does that mean for Nvidia, and why is it up more than 5% on Tuesday? Well, the reason why is because of two reasons. Firstly, because of back in Q1, Nvidia wrote down, essentially said that they couldn't make nearly $5 billion of revenue because of blocked shipments of these chips to China. Now they can sell them, and then they can sell some more. So we're going to get an increase in revenues going forward. So there should be an increase in Q3 revenues as we make up for the declines earlier in the year. But it also means that China is now open for business for Nvidia, and that is a huge revenue opportunity, literally in the billions of dollars every single quarter. Investors are just jumping on the back of this stock. You've got a fantastic increase there, record high for Nvidia. But I do just want to show you the market cap, because if you remember last week when Nvidia made another record high, it became the first $4 trillion company. Well, it's now worth $4.1 trillion, $4.14 trillion. So it just keeps getting bigger and bigger. This is bigger than a lot of European economies. Nvidia is a huge force in the global economy now. So it's not just, it doesn't feel just a company. And I think their earnings report, which comes later this year, is really going to be one to watch. But as I said, you've had this we've had generally a risk on tone to the markets with stocks. We are draining a little bit as we go through the session. We did see, however, not so many concerns about US inflation. So if I go to the 2-year bond yields now, as you can see, bond yields are actually rising. There is a bit of concern now about tariffs. Even though inflation was slightly better than expected, higher than expected, it didn't really show any tariff pass-through. So, the move that we're seeing in bond yields is actually more closely linked to what we're seeing in on the newswires, essentially. So there's been 3 kind of big developments today. Obviously, I mentioned the Nvidia thing, but we're also talking about EU have already put together their list of retaliatory tariffs on the US if they don't get a trade agreement by the 1st of August. They will target companies such as Boeing and bourbon companies, so your Jack Daniels will be more expensive in Europe, and also car imports from the US. Not that there's that many actually, but why are bond yields rising? Because that's actually going to hit. We've seen quite benign inflation. We've also seen not had too much in terms of we've had quite good risk sentiment for most of this week. The reason why is because that could ignite the ire of Donald Trump. Donald Trump could come in and then say, well, actually, it's going to be a tit-for-tat trade war, and they're going to increase the levels of tariffs that they're going to put on the EU. So that is a developing story, certainly one to watch. playing out in the bond markets, eroding, and going back to these world equity markets, eroding risk sentiment in European equities as well, which have been incredibly resilient. The one thing I would point out though, the S&P 500 is above, if I just show you a chart now, it is above 6,000, or it was above 6,300. It's pulled back a little bit from there. That was a key level. We're now currently trading at 6,283. So a pullback from there, totally to be expected. We've had bank earnings out, really, really strong bank earnings. Again, suggest that the US economy, very, very resilient. In fact, credit card delinquency rates at JP Morgan, which is the biggest bank and the biggest lender in the US, they actually fell year on year up to Q2 2025. So if anything, the consumer is getting stronger in the US, not weaker. So that again just reduces the pressure on the Federal Reserve to go cutting interest rates as fast as some expect. If I quickly just throw up a world interest rate probability chart, as you can see, we've seen a bit of an erosion in interest rate cut expectations for September. Currently, there's an expectation about 56% chance of a cut in September. That had been 60% yesterday. Now, before I go, I also want to talk about Netflix. This is Netflix. It's their key earnings data. Their next announcement is actually tomorrow, is actually on Thursday, sorry, the 17th of July. We're on the 15th today. And why are we looking at Netflix? Well, firstly, it's considered a bit of a bellwether for the tech sector because it's the first tech company to report earnings. This streamer expected to see a real increase in revenues, $11.05 billion in revenues for Q2, $3.17 billion in net income. So that's profits essentially for Q2 as well. So that's up because in Q1 revenues were $10.5 billion. So that's quite a big increase. Now they're not going to break down for us subscriber growth data, but we will be looking at what was driving that growth, what regions were driving that growth, because if you see revenues this high, you've got to assume that subscriber growth is going well and their regional expansion is going well. Added to that their ad revenue is going very, very well. So these are the key things that we'd look at. Now, if you follow my pointer, there's two things I want to look at. Forward 12-month PE ratio, 46 times earnings. That's how much you have to pay for Netflix stock. So it is expensive, but look at this. I've just gone over the other side now. Your average one-day move after earnings release for Netflix is 8.51% on the upside. So it can be a very volatile time for Netflix stocks, definitely worth watching. If we just pull up a chart very, very quickly, as you can see, Netflix hovering near those highs that we saw at 1,339, just below that 1,340 level. Currently trading just about 80 points below that. So still quite high. There's still very much an uptrend. So it will be interesting to see. It's in a holding pattern at the moment. Can this earnings report, if it's as good or even better than expectations, really push that higher? And also, what's their forward guidance? Remember, when it comes to earnings, always look revenues, net income, and forward guidance. They're the key things. But guys, thank you so much for joining. And we do hope that we see you next time.